Hello, welcome to this video regarding the AS Accounting Unit 1 paper which was in 2017. I will try to go through as many questions as I possibly can. So let's start with the first question, which is regarding a bank statement that you have which you are required to transfer to a cash book and then some other ledgers. So the first thing that we have to notify about the bank statement that the debit in a bank statement is actually money going out, and a credit in a bank statement is actually money coming in. And this is completely different from what's actually in a cash book, and the opposite way around, because the bank statement is made by the bank and not the company. So we have here a credit transfer from Southgate Limited. Now, because this is money coming in, these must be our trade receivables, and we have a direct debit to Bishopston stores, and they must be our trade payables. So we have everything that's net of cash, and we have a discount of 5%. So that means each of these figures here, which I've circled, represent 95% of the value. The remaining 5% is the discount, and the gross amount will be 100%. So we have to work out what that 5% is. So for the first one, we have 4,750 divided by 95, because that's your net percentage, times by your 5%, which is your discount, and the answer is £250. This, remember, is your discount allowed. The reason why it's allowed, because these are Southgate Limited is a customer, so you have allowed some discount. And then we also, on the 4th of May, we have 2,945 divided by 95 times 5 equals 155, and this is discount received. Okay, because these Bishopston store is your creditor or your trade payable. So let's put this information into our cash book. The balance is already there. So because it's money coming in from Southgate, it would be on this side of the cash book, on the debit side, 250, and that'll be 4,750. We also have bank charges that we need to put in. This is money going out. On the credit side, bank charges of £65. Then we have Shopston's stores. Discount was 155. The net value was 2,945. You are not required to balance the account, so your final answer should look like that. Okay, now we are required to transfer the amount onto Southgate Limited account. So we have to differentiate between the discount and the net value. So the net value was 4,750. The discount value was 250. Okay, so we have the date. The date will be the same for both of them, which is the 3rd of May. Okay. So what do we put here as the narrative? Okay, so this would say bank, because you have received that much money, and this would say discount allowed. It's really important that you do put discount allowed and not just discount to get the full marks. And you are required to balance this account. So the way you would balance is you pick the highest side first, which is this side here. The total for here will be 16,000. The total for this would also be 16,000. The difference that you need would be the balance carried down on the 8th of May of the difference is 11,000, and the balance brought down on this side is the 9th of May, the day after. The balance brought down is 11,000. Okay, so let's now do the Bishopston Stores account. Remember, these are your creditors. So the date for this will be the 4th or the 5th. The detail will be bank, because this is the money you paid out. So this will be the net value, which is 2,945. You would also then have the discount. Remember, this is discount received of 155, and then you have to balance the accounts. So here you would have 6,000. Here you would also have 6,000. So here you would have on the 8th of May the balance carried down, which is a difference of 2,900, and the 9th of May you would have the balance brought down of 2,900. Okay, just before we move on to the next question, just remember Southgate Limited is a debtor, and a debtor is considered, or a trade receivable is considered as an asset. Okay, so if you increase your asset, it would go here. If you decrease your asset, it would go on the credit side. And because this asset has paid you some money and you've allowed some discount, you have reduced your asset. And in the same case, this is a liability account, because these are your creditors, and this will increase your liability and this would decrease your liability. And because you have paid a certain amount and you received a certain amount of discount, you have reduced your liability. So it says state one purpose of cash discount. The main purpose of a cash discount, it hopefully you would get prompt payment, or encourages prompt payment. So if you offer some discount for paying within 14 days or 30 days, then hopefully you would get prompt payment, which is good for the organization's cash flow. A trade discount is actually given to trade, so people who buy in bulk in particular. So it encourages bulk buying, and therefore kind of repeat custom or repeat customers. So that's where you would offer maybe trade discounts. Okay, so it says explain the difference in the treatment of cash and trade discount in the year-ended financial statement. So with cash discounts, you have two different discounts. You have discount allowed, and within the financial statement that would come on as an expense. So therefore that would reduce profit. And in the exam you'd obviously write that in full sentences. And again, in the same treatment of cash, you would have discount received. Discount received is an income, and that would increase profit. Okay. Trade discount does not go into the financial statements. Does not affect the financial statements. Because trade discount is actually given before the net value. So therefore the accounts only include the net value onwards. So that concludes the first question, which in total is worth 16 marks. So I hope you found it useful, and keep an eye out for some extra videos coming about question 2 and so on.